Let's get your quick thoughts on what's happening in the credit markets right now.
Yeah.
The US consumer looks like a beacon of growth right now.
Yeah.
Money's flowing into the States, still getting a positive yield. The dollar's going up. US credit is having a sensational year. Risk adjusted, I can't remember the last time we saw this kind of performance. Again, I want to come back to the risks associated with this. How much longer can a kind of a rise like we've seen thus far this year carry on? How good a year could this be?
Well, I mean, I think that, so the numbers are outstanding, right? So you have more than a 9% return in the kind of U.S. IG space, and you have a 8% return in treasuries, more than 9% return in IG. So what's happened is investors look at this as a very positive environment for fixed income, right? You have the central banks easing to stretch out the economic cycle. You have growth slowing, but it's certainly not, it's certainly not collapsing, right? I mean, these are the market's taking, a pessimistic view about future economic growth, but the growth rate in front of us still looks relatively positive. That's a very sweet spot for investors in IG. I think what would get the IG market to rethink that would be a change in the underlying base rate view, right? In other words, so if economic growth were so strong and inflation were to be a problem, that monetary policy, as you would have in a traditional cycle, would have to start tightening to slow down the economy. I mean, that's not where we are.
No,
right?
We're definitely not there.
We're not there. And so the reality is that in that environment, IG looks very attractive.